Hello again and welcome back for another edition of London Direct. I used to have one question about the FTSE. When is it going to hit 7,000? Well, I can't ask that question anymore, but we still need to work out where the London index is going to go. That's why I've been speaking to Mike van Dulken from Accendo Markets. So it seems to me at the moment, Mike, that if I look at their equities, there's a lot of multi-year highs being hit across Europe. Are we in quite a sweet spot for equities?
We are. In fact, I've just been looking at the stats for the FTSE 350, and we're something like 200 stocks, I think, are within 5% or so of their all-time highs. So plenty of stocks trading within clear water, which kind of backs up the fact that the FTSE itself has finally managed to get above its all-time highs. To join the party, albeit a year and a half late. Some people are sceptical whether there's much more to be gained, but if we look at, as you say, the stocks which are trading at the highs, there are still plenty around which have potential for recovery, and there are stories which could boost them, such as any commodities recovery, which could help the miners, which could certainly add to the upside.
But why are we seeing these highs? Is it simply... Well, I mean, in theory, you could say it's QE from the ECB, but we've seen the DAX hit those highs before. Is it? I'm trying to work out why we're there. Yeah,
I think the QE is a big factor. Obviously, bond yields are offering next to no returns, if not negative. Therefore, the home for returns are restricted, and equities are seeing a lot of that buying. I think a particular thing with the DAX, don't forget, it does include dividends, so it does keep kind of ticking up. Also, I think from what I was reading, the German index is particular in the sense that retail investors aren't actually as heavily subscribed to it as, say, the UK and the US. Institutions have been piling in to the DAX based on the assumption of QE, and it's benefited even more strongly since. So hence why it's probably outperforming both its US and especially the UK counterparts over the last while, and indeed possibly over the last year or so.
Yeah, I just want to talk about the FX implications for various companies. Yeah. We've got a weak euro, we've got a strong dollar, and I'm losing track who that's good for, who that's bad for, because the US has always taken this point of view that a strong dollar is a sign of a good economy, but then again, for the commodity companies, it's also bad news. So where are we in that story at the moment?
Yeah, I mean, if we look at the FTSE, very commodities heavy. Those commodities are denominated in dollars, therefore the strong dollar means that those ex-dollar can buy less dollars, therefore less commodities. So that is a hindrance. For the US itself, yes, I think the message from full year results was that the stronger dollar was tempering the outlook, and it may well be something we see more of in Q1 results. I agree. The strong dollar is a sign of a good economy. The fall in unemployment, the housing data is good, the PMIs seem to be good. All that's good, but the dollar has run away so much. We were touching the 100 mark for the dollar basket. Has it gone too far too quickly? So much Fed chatter this week actually seemed to be trying to calm markets back from pricing in an imminent rate rise rather. And even Yellen's recent speech was saying, OK, we're removing patience from our language, but we won't be impatient. Yeah. So the game just continues in my view. And the Fed has that luxury, I'm sure I've said this to you before, of being able to decide what it looks at and when. So for the first few months, it may well look at X, Y, and Z. The next few months, it could be that, right, actually, the real things we want to concentrate are on A, B and C now. And that can change their timing and their outlook. So it may well be that a rate hike is in fact pushed out a bit further, although the language is probably going to keep eking towards prepping us, a little bit like prepping us for the end of QE. It took a long time, but it was consistently done month after month after month until it was finally delivered. I even read some people expecting actually a rate rise to be actually pushed into the very beginning of next year.
Yeah. Just to stick with the corporate story for in terms of these currencies, how much credence do you get to give the idea that I've been reading commentary where X company is up because the dollar's moved by 1% to the downside, meaning that their profits will be helped by that. Do you think that there is that such direct correlation, or is that just trying to find a link where there isn't one?
I think it might be a knee-jerk reaction rather than a true financial fundamental assumption, because, as you say, which companies are actually, running their business based on spot prices? Many of them will be hedging, both on materials and currencies itself. Companies like, I think the tobaccos are really being hindered by the strong dollar. They will have been hedging out as far as they can, a bit like the airlines have been, making the most of the low oil price and factoring that in as far forward as they can. So I see it as a knee-jerk reaction in the markets to the dollar coming off its highs. Hence, we've seen commodities rise a little bit, which feeds through to being a benefit for some of the miners, which have come off their lows. Whether you will actually see that explicit link come through in the financial results, possibly unlikely. We only hear from them quarterly, and their outlook is going to be based on more than just what's happening right now. They're going to be looking 3, 6, 9 to 12 months forward. So basically the markets have got to go with the information they've got. And when we see that the strong dollar has hindered so much so far, it coming off its highs, it's an understandable knee-jerk reaction that certain stocks benefit as a result. Whether the dollar index can weaken any further to really help those companies is another matter entirely, given that we are being teed up for a US rate rise.
Well, thank you to Mike for his insights. We're going to debut Augustine Eden now, also from Accendo Markets, and we've been talking about the housing sector here in the UK. We've seen Bellway report. It seems to me that the housing trading in the UK just going one direction, isn't it? We've got all political parties agreeing that we need to build more houses. We've got ultra low interest rates. Surely just long all the house builders.
Certainly, you might think that. We had Bellway reporting today. Obviously, their profits are up 53%. The share price is up around 4% at the moment. However, you also mentioned inflation. This is currently at 0% today. Mark Carney was talking in February about it going negative before it comes back up again. This would mean prices would start decreasing. I don't know, if prices are going down, would you buy that house today, or would you possibly wait for the price to go down a bit more?
But isn't the rhetoric being from political parties that we do need to build more houses? There is that political will, and there is that demand as well, that fundamentally things are quite rosy, aren't they?
Yes, they are looking rosy. I would just be very cautious about investing, going long the sector at the moment myself. Of course, people always need to buy houses. It'll be really interesting to see what happens in 2015. I'm thinking there might be a sell-off. Okay,
well, that's interesting. What do you think about the FTSE generally? It's been hitting multi-year highs like we've seen elsewhere in Europe. Do you think it's looking quite toppy at the moment?
Potentially, yes. But, last Thursday we were wondering if it would break 7,000. It didn't. Come Friday, we had a slight weakening in the pound. That pushed it up. Since then, 7,000 has become pretty solid support for the index. It's been lagging its peers, its global index peers, over the past few months. So we're pretty confident that it can stay above 7,000. Average broker consensus for 2015 is around 7,400. And there was also an article yesterday which I read which mentioned that the index has broken out of a 15-year trading channel, which would make levels nearer to 7,800 more of a realistic expectation. So it's an exciting year. It's certainly catching up to its global peers.